Guess I gotta get to work. Guess you gotta get to work. What was that I just said right then and there? That is quite different. Quite different indeed. Hi, my name's Orb. Welcome to Or Plus. It has been a minute, hasn't it? Not gonna lie, I had initially wanted to do shorts, just shorts and only shorts, but then I got to work. I got to work real hard, and it's only now that I've really come to terms with what I'm doing. Have I come to terms with it? I mean, I did some journaling. I wrote stuff down. I did a lot of research, and by a lot, I mean way more in a year than I did in the past 6. Way more. Um, I got into auction market theory, learned a lot from it. I really took the time to understand it, understand its complete um, theory, all of it, as much as I could. Just to understand it, I did what I could. I've since moved from only applying that theory to making my own strategy. Okay? It's a little bit of a combination strategy. It's not really. I don't know of anyone who uses this outside of me. Then again, I have opted not to go looking for other people's advice because they can be very noisy distractions. Not meaning that in a disrespectful way, but in the sense that the discipline of learning has always been an issue for me, and that my patience with others who have opinions that may be valid for them simply won't be valid for me is just nowhere to be seen. It's not present. And so I've opted to really dig deep into the roots of strategies and probabilities and the definitions of each and every little thing. All in the hopes that I might make a couple monies off of this. Just a few. Just a few monies. Um, I've since learned before recording this, and after having recorded the previous video on this channel, that TJR's Smart Money Concepts trade sounds great, and I have gotten it to work from time to time. But it is not as consistent as some of the other methods and theories, and it is widely put that no one strategy fits all. Ergo, I have since moved on from using his strategy, with the exception, the smallest exception, that all of my other strategies, all of my other thoughts when looking into market just fail. Plain and simple. My strategy is entirely based around auction market theory and, of course, one other thing, um, indicators and my knowledge of trend. How you identify a trend? Well, if it's making steps going up and it's not breaking structure like this right here. We have a low here. This candlestick closed, or yeah, the body closed below the wick, ergo break of structure. It's not going lower. Pardon the alarm. Essentially, my setup goes as follows. First, I have to mark all the time frames. This is the general setup on the high time frame, 1 hour. And then I mark on the high time frame 2 points of control, the current being the overarching point of control. So in this case, it'd be this, based on the amount of volume, right, over the largest span of time between the close of previous day's session, or the end of my trade specifically, and the end of my trade for today. Right now, this is the current point of control for the high time frame as of this time here. After I've marked all of that, I have to observe the market direction between them. So 2, this is 1. The second one's here. Why is this number 2 POC? Because it is the second largest amount of volume in a singular span of time outside of the current largest volume spread across the next, the largest span of time. These two are stepping stones. Essentially, my thought process goes, if the market wants to continue higher, then it'll react strongly to the current point of control, because the point of control is where price is magnetized to. It acts as the magnet. Price has to come down and either react to this in a strong manner, in which case it'll come up. And this is all based on auction market theory. You can look this up however you wish. Or over time, the volume here will begin to build, and surpass this. At which point, we'll see price begin to break out of this balance range here. This balance area is formed by the low and the high off of an imbalance from before Asian session open. The imbalance was right there, and it has created a low and a high since. So this is our balance area. Price has discovered a point where buyers and sellers agree. Now, my thought process, what I think is going to happen for today. I think price is going to build and build and build and build and then poke out of this. I think it will. And right now, for my strategy, I am to take the most recent fair value gap, so this right here, and wait for it to get tested a couple times. Technically, it already has. Right here. We had one level here, and it looks about super close. This level here, it got tested. See, what I'm supposed to do is, after observing market direction between them, because right now it looks like it's going to go higher, but we just broke structure into a downtrend, so potential false break. We're about to find out. Yes, we're going to use the MACD. Bear with me. Just bear with me a second. After observing market direction between them and the volume patterns via the MACD, this, and the volume patterns here, I have to mark the fair value gaps that haven't been filled, the one on the higher time frame. After this has been marked, we go to the 5 minute. That's what we're on here. Then we have to observe the unfilled imbalance for price action to revisit. It's revisited it right here. Boom. This is the first time prices revisited this imbalance area. So from here, I have to wait for consolidation. Technically, we got it right here. This whole shtick is consolidation. It's tested this and has gone higher. We missed our opportunity to enter here to get this move up, which is fine. I'm after the bigger fish. The bigger fish is the move on the high time frame. Okay, that's what I'm after. After waiting for consolidation, I then have to look for price to reject a level within consolidation. So This level right here has to come down, get touched, and then moved out of. Again, this move out is the signal, hey, price is no longer going to stay within this area, or for that matter, this area. So better hop on the train while we're at it and ride the puppy, right? Well, I'm supposed to place a mark here when it first enters. This is at the start of London session. This is not where I want to enter. I want to enter within this window here. So when price meets that level again, wait for candle closure. Because one of two things is going to happen. Either A, price is going to come down, test the same area, strongly react, and then rip up. Or B, it will come down and then continue lower. And it will be a breakout of consolidation. One of two things will happen, and it's usually that. This is a large imbalance, and this is a large amount of volume over a short span, over a span of time. That tells me price has rejected this level and is not looking to continue lower. It is looking to continue higher. That aligns itself with the current bias, that price is going to continue higher because of this uptrend. Yes, we had a mini break here. We are in a downtrend per this break specifically. But if price has rejected this level a second time, which that's pretty dang close to it breaking a second time. What's a low? Down, up, right there. This is the low. Not this. Because those two match, this is our signal that price is going to continue higher. Now, why haven't I entered here yet? Because it's not in my window. I want to trade between the times of 9:30 and 10:30. That's my only quip with what's happening right now. I'm unable to trade because of the time. I know I won't be getting my setup in this window 99% of the time. And so that is why I have this strategy in place. Now, the final bit, the entry, if I will, right, is based on the volume profile and the bias of the high time frame. Bias of the high time frame says we've just broke structure off of an uptrend, so we're in a downtrend now. And per that break of structure, we have to then place a trade on the 5-minute time frame based on that candle close and the rejection of that level. Okay? That's currently what we're waiting on. So, technically, I should have entered on this candle here. And we should be riding this all the way up. However, we are not within our window, so I have to do a little bit more work, just a little bit, that extra nudge. I got to do that extra bit to make sure that market is going to continue in this direction because we did break structure. We broke structure here to test this again. So what does the high time frame say? High time frame says price did test that area. It was rejected because we see it moving up now. Buyers are currently present. Buyers were present during this candle. So price does want to move higher. So what's the problem? Why is it not going higher now? Because there's not enough volume. That is the sole answer, really, at the moment. And we have a false signal. It's right here. MACD and this actually give us a false signal. Price doesn't know what it wants to do right now. It's in its balance area, and it's consolidating at the moment. Right now, it's building volume right here. This massive amount of volume that's going to enter on market open here in the next hour, because it is 8:09 a.m., is going to tell us what market wants to do. Because price is far above this line here. This line is pretty much the matching of the orange line down here. I want to see this line cross back up and volume push it even higher. But right now, the amount of volume that would have to enter the market looks like it's going to force it to continue lower, this blue line and price respectively, until the two of these meet and match. So, what do I think is going to happen? I think market's going to go down. I think it is. Now, this is where I'm actually quite curious. Let's see what news has to say about any of this, because look at that. We have a triple. Interesting. We have a triple orange folder for the USD. High impact. Them some pretty big numbers, not gonna lie. Actual is greater than forecast, good for currency. Forecast is 90, that was greater than previous. If it's greater, price goes down. Greater than forecast, good for currency. Greater, down. So that is what I'm looking at. It is news that is going to push price lower. How much lower? I don't know. Looks like this is the past. Oh, these are the past years. This is 2026. Every time an orange folder is hit, it seems, we had a small amount of dip. We are currently in February 2026. No, we're in January 2026. So that went down -8. That went down 16. It could claim these three here. So it could go down 20. It could. 2020, this was COVID. That's what this was. Relative equals here. Although this is on the yearly basis, so it's a little bit different. This is the only graph we have for this folder specifically. The rest of this is completely random. So what am I thinking? It's not major. It's not as bad as this is right here. I do think price is going to go down. Let's relate this to the graph just a little bit, shall we? I don't know if that showed up for you guys or not. I apologize if it didn't. Essentially, I was looking at a graph where every time a folder hit, it would show when it hit and then how much of a drop there was in that folder, right? From that folder down onwards. And then it would then tie into the next one, showing the lifespan of the effect of that folder. That was on a month to month, year to year basis. So it had the year down low, but you could view each individual month where that folder popped up. And just looking at this, zooming as far out as I can, actually going up to the day, just cause. For the past while, we've been in an uptrend, and I can actually see these three here being where those orange folders hit on the other chart, and then we have another three here, and this is 20. No, that's wrong. That's wrong. Because each of those were months. This is 23, 22. So yeah, this right here. This is 2020. This is COVID. And then let me see this chart. 1, 2, 3. That was July 2025, September 2024. So that right there is July. July and August 2025 right there. And then September 2024. right there. So it doesn't look like it will claim those. It won't go back down to September 2024, but July of 2025, it might target. What am I thinking? Because this has nothing to do with my strategy. I'm trying to relate how news affects the chart or how it affects price. Clearly, if it's good or bad news, market's going to go up or down. That's the Nanda rule. I'm not smart enough to know exactly how it's going to relate. I just know that based on the chart from the website, price has gone down every time one of those floors hit. And if the actual is greater than forecast, then it is going to go down. The question is by how much? If not by how much, because we know it's going to go down on news. That's when do these come out? This is 10 a.m. Two of these folders comes out at 10 a.m. and then the other one comes out 4 p.m. We're not trading at 4 p.m., so we don't have to worry about that. But 10 a.m. we do have to worry about. It'll go down. That much I am certain of. So go ahead and go back down to the hour because that's a thing. We are working with this session here. Boom. When was the last time that happened? -5, -8, negative. Okay, so it's gonna overcorrect. Market's been down a lot. They've been about even. I don't think I can rely on this at all because it knows so little, and that is the numbers are all over the place. The consistent pattern is it looks like it overcorrects. So every time one of those folders comes out, it is a check and balance type of gist where if it comes out of a certain range, price will then either go way past it, and then the overcorrection is place it at a higher level and then watch it go in the opposite direction, so higher if it goes too low. And then in relation to where that folder is placed, it then bounces back and forth. If I strip that away and base it around the point of control that we've got going on, I think what's going to happen is the folder is going to be placed at this price level while price is still consolidating, so it'll be roughly about the same gist. And what's going to happen is price is going to tank and still coincide with this. With what I said over this line and then this chart right here matching up the MACD. The volume says price wants to go lower because it's got to retest this area of balance. And based on the reaction to this, it could continue higher or it can continue lower. Auction market theory says on consolidation, that is the end of one auction and the beginning of another. The beginning of another is when an imbalance has formed outside of a balance area. Well, on the hour, we have our balance area here. We know we're in a downtrend based on this candle's break right there. But trend isn't everything. So we're looking for a breakout of consolidation. And right now, per London, we have our consolidation here. What breaks this range? Well, here's our fair value gap, though it's not current. We need the current fair value gap. So right here, that fair value gap is what we're after. Boom. We're looking for this fair value gap to get tested again, and then a level to get tested from that, and then forward on. That made no sense. We wanted to create a low, down, up. Here's our low. We're not going to mark that a second time because it's literally in line with the retested level. This low was the retest. The highest it's gotten to is right here. Go ahead and mark this. This is a balance range. We want a breakout of this. Where's the point of control on this? Right. We'll go from the imbalance forward, so that way it's fairly readable for the volume. Point of control is right here. And as we can see, price is nested nicely up against it. Now we need to wait for breakout and reaction based to either imbalance A or imbalance B. Imbalance B would be great for us because it will have retested this price range again and we'll actually see a more apt entry point. And if it doesn't and proceeds to bounce from this point of control upwards into this, we'll then need to wait for this area to get retested a second time and then enter on that for it to go lower. Right now, even the MACD, I believe, is agreeing with us. Price has gone up above and is now sitting just below. But it is rising again to test an area that has value on the 5-minute. So we need to wait and see. And just so we're on the same page, this candle did not go into this area, so I'm not entirely inclined to count this as a valid test of this imbalance. Because again, per my strategy, I have to wait. I have to observe the unfilled imbalance for price action to revisit. Price has to revisit that area specifically. And then I can rule on the level for rejection. And then from there, enter based on that candle closure. It's just a waiting game. Gotta wait and see for it. I'm gonna pause the video because I think that's literally all I can do at the moment. Yeah. I want to wait and see. I'll be right back. Okay, everybody. So we have stuffs to talk about. Just a bit of stuffs. In the pause, I had a conversation with a couple of friends, and then I started jamming out, and then I let time pass a little bit, and then here we are. We marked a new, freshly made fair value gap on London session still. We're waiting for this level here to get hit a second time so price can reject this level and continue lower. Price has continued up, stopped within, and has dropped, but it has not broke out of this range just yet. We have not broke structure, and we have another 2 minutes for that candle to go. Before it does that, I just wanted to note that that fair value gap has not been filled, though it has been crossed beyond. Um, I am looking to play off the hour play, so we broke structure on this candle here. We're in a downtrend, and per that downtrend, I'm looking for a trade at this level or this level. So we're waiting for price to return up, test level A and B. If it rejects level A and it's a strong enough reaction and imbalance because it's seeking new balance area, right? We'll be entering off of that, putting our high at point B. If point B is hit, we're looking for it to reject again strong, because this line here is far below the 20 SMA. I think that's the 20 SMA. Is that 20? 20. Yeah, that's 20. So we're waiting for this right here to bounce back up, come real close to this, but not cross, and then for the chart to match. Once it has matched, we'll take a trade and hopefully come out on top today. Hopefully. So far, we've swept all of these lows. We're working on that low. We're working on this low. And in the event market decides it wants to open, I'm looking at this right here. Looking at that fair value gap, which on the hour is the current valid fair value gap. We had not the same level, but close to right here. Retested, rejected, and on this candle close within the next 40 minutes, we'll see that imbalance begin to form here, which will potentially go further on down here. We got a lot of imbalance to get through, though. We got two imbalances to work past. So, long shot on that. The only thing I could see it targeting is this way down here, and that's the current low before the break right there. Beyond that, that is a significant drop way down there. We don't want to touch that. So, I don't think that risk is worth it. We have, back on the 4 minutes for this candle right here to close. That imbalance, I think, is where we're going to enter. If it's an imbalance. Imbalances are a sign of continuation. This move is within an imbalance. Levels were rejected. And I could be wrong. Market could open and completely reverse, but I'm looking at it and I'm seeing the volume profile not matching up. I think it's going to hunt down that low right there, that point of control. Because it's not going higher, and if it does, it'll hit this, which is what we want it to do, and then react to, and then fly back further down. It's just recently broke out of the balance area that I had marked previously and gone into the imbalance area from before. So, this is point number 2, failure. We could have entered here, but we didn't. And instead, we waited for this to form. I feel like we missed an opportunity, but at the same time, we haven't traded within our window, so I want to wait. I want to be patient. Volume profile says it should continue lower. The news drops at 10, so it's not as reliable as I thought it was going to be. We'll check that again real quick. Make certain that it hasn't dropped yet. It has not, so we're good on that note. Have I unpaused that? Yeah, I have. Okay, we're good. So far, price on the 5 minute and this are coinciding with each other, so that's valid. This is a valid signal. And it's in line with our bias. We broke structure on the hourly, and we're seeing that continuation now. We just need this level right here to get tested again. That would validate this for value gap and then this imbalance here. It's leaving some pretty good footprints on down. Price didn't know what it wanted to do all throughout this, and it's only recently that it's broke out of balance area. One minute till close. Let's see what happens. My biggest concern right now is that it's a false signal on a higher time frame. It looks like it's a false signal because we are about, if it continues to go on this trajectory, it'll hit the current POC on the high time frame. That's what this is right here. This is the magnet we were looking for it to hit earlier, which works for us. This is correct for price to continue lower the way it's going right now. But there's a problem. The MACD. MACD says we've been continuing in this down move for a minute. I mean, not duh. We broke structure there and it's continued down. But the thing is, it's been going down for a minute, which means on market open, we might see a retrace. And then from that retrace, a test on a level. That test is going to show up in the form of a price gap. And then from that price gap, it's going to hit this point of control right here between London and Asian session. There's our price gap right there. We've got 5 minutes until market open. That's that price gap I was talking about a second ago. So I want to wait until that gets hit first. That's going to get hit, tested, rejected, and then it's going to drop. Either it's going to drop or it'll cross, breaking the bounce area in the opposite direction because it's poked through. It's all based on that point of control. Yeah, that's a pretty dang big price gap right there between these two candles. Yeah, 3 minutes, 53 seconds. My current risk is 209, 11% of the total account size. It's a little bit of a risk, but I mean, you see the account, you see the balance on the account. It's not like it's going to change with this trade, nah duh. But if the setup doesn't show up, then I'm not going to bother entering. Spread's at 12, so if I do get stopped out, it'll be by spread. I've pretty much honed in on the level it's got to retest. The entirety of the range it has to retest. And it doesn't have to. It could honestly just start with where it's at and just continue balling through every little low it can. But I don't think it will. I think it'll go up alongside that price gap, test on open based on volume, and then from that retest, it'll drop. And we do have a third. Is that 3? No, that's 2. So we have another point of control at the top of this imbalance area right here. I couldn't have labeled that any better. It's like smack dab in the middle of both of those imbalances. So price is going to boomerang back up because of that. It'll take step one. Notice that next step is a little bit too high, and then it'll drop, build volume, and then rise again. And I've got a strong feeling that target is going to be the POC off the previous day's session open. If the reaction isn't there, then I will know my idea has been invalidated because it will have crossed beyond the current balance area that it just left in the opposite direction, and it'll continue in an uptrend based on previous month history. What's the daily say? The daily says we're in an uptrend, does it not? No, yeah. The day says we are in an uptrend. We broke structure on that with a hilariously large price gap. Look at all those price gaps. 1, 2, where is it at? 3, 4, 5, 6, 7. 7 price gaps in the span of 2 weeks. Market's been all over the place. Golly. All right. We want to see, because this is no longer an imbalance. This still is, though. This is my entry level. I want to go short. If I were to go short based on this entry level here, leave it to 1. My target is going to be between these two. I want to say is the safest bet. That is a 1 to 8.68 risk to reward ratio, where my risk is 11% of the account size. So I could get back 8%. I could. There's the indecisive candle off a price gap. Price came up within this, rejected. Here's market open. We have 5 minutes, I think. Go away. Very indecisive coming into market. We'll see what happens, though. Golly. Whole lot of volume. There it goes. Either we're greeted with an imbalance, in which case, or not. Price has got to retest that, otherwise it's going to rebound off of that low. That's what's going to happen. Either it retests that area I just mentioned, or we'll see an imbalance go through that point of control down low, and it'll quickly rebound on news. So when news drops at 10, we'll see it tick up, and it might hit that same area a second time, at which point it will have been retested, and it might continue higher from there. We'll see a break of structure, the whole 9 yards, and it'll just keep going. We got 3 minutes for this candle to close. I want to see what happens. Go higher, not lower. Here's a third scenario. Price might not want to move and just continue to consolidate. Although you can see the uptick in volume here. Combine that with where it is falling here, where it's an imbalance. The other point of control is holding strong though. It could play to the higher time frame. Briefly. Yeah, that's saying it's going lower regardless. It hasn't shown an imbalance though in any of this. So I think it'll continue higher first. After hitting whatever it has to down here, it'll come up, hit this, and then drop. Of course, that whole candle's like this entire move, so gotta be patient and wait for it. There's a ton of volume here. That's the typical day traders coming in. I'm not typical. I wish to be better than the typical. You get the point. We've been going down for a while now, so at some point it's got to stop, come up for fresh air, hit a level, and then drop. I think I'm wrong. This has been a huge amount of time where price has just been below the smooth moving average. So, and the point of control is up high. So indifference is what it's going to do, I think. Based on the 5-minute, it should continue higher, which does look like it is what it's doing. It's just continuing higher. It's going to test that zone. On the higher time frame, the high that it could try to hit is this right here. This would be the defining point of control, as well as this level here. There's a second move into the 5-minute bounce area here. We want to see that hit and then fail. Market open says we're going lower. Daily time frame says we're going lower as well. Let's see how it takes to the overall point of control. Even if this candle were to close, it wouldn't present an imbalance because right where it is now, that green candle right there on market open is right there. It would need to close even lower than where it is now, and then the following candle would need to close low in order for that to be an imbalance and it continue lower. Without that closure, it'll continue higher. And then from that, we'll have a valid retest, and that valid retest will then lead to our entry. That is the only thing I'm waiting on is a valid retest. We get it, and that's probably what we saw right here. Just before market open, it's set up an indecisive move, and then the retest off of the resulting open. Just so you guys are able to see exactly. This right here is that imbalance I'm talking about. That's where this green candle ends. And this right here has got to close below, and then the next candle's got to close even lower. We are far below the SMA. It's hit the POC. So already that's going to be a thing. Okay. That's fine. This candle is going to make or break the imbalance. Wick and all, if it closes above or the wick goes beyond that white line, it is not an imbalance. There we go. It is no longer an imbalance. So we cannot count that. Just high volume market volatility. And there it goes into that 5-minute value area there. See if it hits that range and then drops immediately after. In correspondence with the high time frame, we're looking for a downtrend. Right now, that's been so far the case. We need price to come up into this range, and it has to fail and then drop again. Right now, it's hit that first spot we thought would work, but it just doesn't. It's met the SMA on that, so false signal by default. Although we have hit point of control there, that's not. Point of control is just a point I marked for rejection. It's the past points of control that I've marked. They've been dancing across, so that makes sense. That hit the balance area and crossed above that point of control current. Sellers are present during this candle. We have a minute 30 to go. I said it earlier. If it hits that point of control and reacts strongly to it, it'll continue higher. And sure enough, it did. Sellers were present throughout the candle, but that doesn't uh, take away from the fact that it pushed higher than the opening candle's result. So now I'm looking for not a retest, but for price to push above the London session POC, and then for it to continue. We didn't get an imbalance, so current auction is still in progress. It's still in a downtrend. The question is, if it continues in that direction, what would I need from this? It would need to test this and then continue to drop. The drop will need to have a, not an imbalance because that would have been too late. I think I'm going to stick with what I said a second ago. Not a second ago, but earlier. It's come up, it's tested this area. I think it's going to continue down. I don't think it'll go up at all. It'll come up, test. This is where we'll enter. Stop loss there. We'll see it drop. It's met the level. What am I waiting on? Candle close. It's now gone beyond that level. Same level? Yeah, actually. Same level. Would not be smart to do that because this is now an open candle. If I had chose to enter there and it continues higher, I would have lost. So now what am I looking for? I'm looking for move up, hit POC, and potential drop. It invalidated that when it crossed. Price didn't leave a wick down low, so that is current imbalance. Imbalance is seeking new balance area. So I'm going to do this. I'm going to buy in, not sell. I'm going to mark my stop loss just below this low here. My final take profit is going to go at a, just to move it out the way real quick, into this. Safe bet is a 1 to 2 risk to reward. So that's what I'm going to do. 1 to 2. Confirm. This is based on two things. One, our previous trade idea was invalidated. How? We had an imbalance that crossed way beyond this. This was our validation for the downtrend. And as a result of that failing and an imbalance being presented, we have 2 minutes remaining of this candle, and it just looks like it's going to keep going strong. Price, as we know it right now, is seeking higher value. And as a result, yeah, as a result of it seeking higher value, I'm just going to go ahead and go on a limb. So we're going to break structure. This is going to be our new trend, and we might just see price continue and hit our final take profit. I'm only going to do a 1 to 2 risk to reward because I'm not entirely sure where it's going to want to target, because, I mean, I could go all the way up to here. Did I go higher? I think I went, yeah, I went higher, just a little bit higher. So we could see it cross this and then drop even higher. We could also see this right here hit. So I think that's what I'm going to do. I'm going to mark this. I'm going to mark this as 2 potential take profits. This has already been swept above. That is a high that hasn't been hit yet, I don't think. I can mark this just to be funsies. That's not good. This is the next available high. So that's literally it. 3 target profits highs. And that's pretty much it. Just gotta wait now. See if it comes to fruition. Looks like it is going to come to fruition. So what I'm going to do is I'm going to pause video now because we're right where we kind of want to be. Um, Everything about my strategy said it was going to go lower. Price, the trend at the moment said it was going to go lower, and the idea was almost instantly invalidated on market open. And I know news is probably going to bring something along the lines for a market drop, which is completely fine. The current low that I've got the final stop loss set to is primarily there as a general stop loss because I don't want to lose more than what I put in. I do think that price is going to continue higher. How much higher? Not sure. That's why that final take profit's way up here. I do know it's in imbalance, and when this candle closes in the next 4 minutes, we'll have broke structure. We'll be back in an uptrend, and we'll see it continue higher from there. That being said, I'm going to go ahead and leave the video off right here. When I unpause, we'll start here, and we'll see it continue to rise. We'll even put this up. You see our risk-reward ratio is a 1 to 2. Yeah. Wish me luck. Hopefully this is a well-placed trade. Hopefully. It's as good as I could get it. I didn't say that confidently. I'm not fooling myself. This was a shoddy trade. Very shoddy. We hit our first take profit there. We still have imbalance to work off of, and it can continue higher. We shall see. This is our final take profit up here, but no, it's not. This is the high most recently made. This is our first target, second, and then third way up there. Our final take profit is way up here. There is no note that'll save this. So what I'm going to do is this. To keep true, there are my notes. Final take profit, final stop loss. I'm just going to leave it right here. We'll see it if it drops. If it doesn't, yay. Yeah. I'll be right back. We'll review everything that occurred in due time. I'm going to wait for it to do its thing. BRB. Okay. So, I have managed to recognize that we have broken structure off of this uptrend we were just in, and that we should be seeing price continue on lower. I'm satisfied with this number. I'm going to go ahead and close position. We didn't hit final take profit. We got about halfway, which is still okay. I mean, we entered in on a move that was already in the making. We missed out on the initial move because we wanted to make sure this was confirmed. We did good. I did good. Considering that my initial idea was wrong, the recovery was what mattered most to me. And we took a risk. The risk was taken. Okay? That much is set in stone. Understood. Should I do this again? No. But, it was a good trade. We came out with a decent amount. It wasn't quite what we lost here, but it was enough to make up for it, in my eyes. I enjoyed this trade. I enjoyed making this video. The primary reason I made this video was because I noticed that in my own journaling, there are things that I can say in this video, and it would be so much easier to just say it the way I think it versus writing it. Writing it has done such wonders for me up until this point. And from this point forward, if I can't put it on paper, it'll be in video form for me to come back to, review, view, comment, put in description notes, whole 9 yards. My name's Orb. Thank you for watching this episode of Orb Plus. This is the first video I've made in a while, primarily because I found flaws in the previous strategy I was using, and you can go back and view those videos, watch the growth through that process, and come to realize how inconsistent it is the same way I have. I made mistakes all the way through every one of those videos, and even on my good days, there were things that lined up literally day after day, and I would fail a trade. Day in, day out, you'll see those mistakes being made across those videos. I'm looking to do better. I'm looking for consistency in my winning, and right now, the best way I know how to do that, stick with the strategy I made and adapt to market as it comes out and unfolds. Thank you guys so much for watching. Before I end the video, I just want to note all of this. I just want to note that this is the point of control for Asian and London session. This was at 7:35 that this was marked down, and London's point of control was the lesser of its greater, and the Asian point of control was greater compared to the other. This was London Control's main point of control at 7:34. Asian session's second point of control, same time. We broke structure here, and we're on a downtrend for market open. Sure enough, we saw that downtrend end when news dropped, or not news, but as news was coming out, we saw the reversal, and luckily corrected course just in time. This was the general point of control over New York Stock Exchange session open for the previous day all the way through to current 7:42 a.m. This was my final stop loss. This was my high time frame point of control of 3. This potential target never was hit. It was thrown out just in case price wanted to continue beyond and in the downtrend we thought it was going to go into earlier. Luckily, it didn't, and it continued upward. This was our exit. This was our entry. Right here. We entered right here on this candle. Moving up, we saw it move down. Continued higher. No biggie. Yeah, this was our initial balance area between this white line and this white line here. We noted this whole section, these 3 lines right here, as a potential area test. This was the general point of control for literally all of Asian session and London session leading up to market open. As you can see, this was where most of the volume was throughout the session period. Yeah, and for the hourly time frame, just on the same page, boom, that is what the hourly looks like. And as you can see, we clearly broke structure back to the uptrend. We left a huge imbalance and continued to rip higher, and we left off here. Thank you guys for watching. I'll see you guys in the next one. Peace.